All right, fellow traders, here we are, June 1st. May is ancient history, although I'm going to do a video recapping the trades that we did for May. Turns out it was a pretty good month, but there's a lot going on here for June. I really did a lot of trades, so let's jump right into it. The market was down, now it's coming back, so we have some volatility. Interesting thing today is that healthcare, consumer staples, really underperforming, so those economically defensive sectors are not doing so well, while the NASDAQ seems to be outperforming. So let's go tech and let's go growth. Anyway, so let's go over some of the trades today. Let's whoop it up. All right, here's Pinterest. I put the bear put vertical on this. I am anticipating some downside pressure. We're doing okay today. I put this trade on. Our break even here on or before expiration is 1922. So we're trading at 1889 now, having a rough day, down about almost 4%. So with this, we went ahead and we sold the June 24 puts, $18 strike price for 64 cents. We went ahead and we bought the June 24 puts, $20 strike price for $1.42. So we're looking for some upside potential in a downward biased stock. Here's Oxy. Oxy has been stellar. So we put this bull call vertical on it. It's well above our level here. You know, oil was breaking out today. I think the embargoes took, the Russian embargo took effect today. They can't produce, or they can't export oil via ship. So this is a kind of buy the rumor, sell the news thing. So I ended up unwinding this Oxy trade. All right, so here we are. We had originally sold the July 15th calls, 57.50 strike price for 805. We went ahead and we bought the July 15th $55 strike price calls for 946 today. We unwound them for, call it a 49% return. I'll take it. Okay, so here's Cigna. This is as I mentioned before, the healthcare names, the consumer staples, a little bit under pressure today. This stock here is down almost 1% on the day, although the market is off. This is getting hit. So we had this bull call vertical. We were in profits. I ended up taking it off. So you can see here where we originally bought the July 15th calls, 270 strike price. I'm sorry, we sold the July 15th calls, 270 strike price for $7.16, and then we went ahead and we bought the July 15th calls, 260 strike price for $11.24. Today we unwound the rest of the position on the first position that we sold, which was on the 9th. That was May 9th. We made 20%. Today we unwound it. We took all the rest of it off. So we made, call it 29% on the second batch. So in all, a pretty successful trade. I'll take it. Okay, here's S&P Global. So today they came out and they said that they're pulling their guidance going forward. They're just unclear of how things are going to shake out for their company. I guess, you know, the economy is still strong, but there's not a lot of companies issuing new debt, so they're kind of in an awkward range here. So is what it is. The stock really gapped down hard. It came back. It actually came back almost to flat today. I went ahead and I went long puts on this. So here we are. We bought the July 15th $330 strike price puts for $9.70. They're trading at 13 now. We're up, what, 32% in the trade. I'll take it, but I think we can get some more because this thing is looking like it's going to start a new downward bias. So here's onsemi. So you can see here that this thing has been kind of struggling to break out. It had a good move here, not on great volume. Now it's coming in again. I went ahead and I went long puts on this. I want to show you one thing. So I saw this morning. So trading in options of onsemi rose to 3 times the 20-day moving average. And you can see here the September 16th $60 puts traded pretty aggressively. So there's a lot of folks banking on a downside. Again, I take a look at the chart. I could see it moving lower. So I went ahead and I followed that trade. What I did here was I bought the September 16th $60 strike price puts for $6.80. You know, trading now at $6.60, so I'm down a little bit in the trade, but I'm anticipating that this thing is going to move lower to the point where's our number here? So 53.20 is our number on it before expiration, but I'm feeling pretty good about this. The MACD seems to be rolling over, and we'll see if it can hold this moving average as support. So this one's a little tricky because I can go either way with this, but I went with what the options market were telling me. So here's KLA Corp. KLAC is the ticker. Same thing with kind of on the last chart we saw. This thing came up here at the formation. It's hitting some resistance up here, a lot of headwind. You can see it started selling off today. It's since recovered, but I'm anticipating that this is going to come lower. So I went long the puts. You can see here that I came in this morning. I see that the options rose 5 times the normal. And I'm looking at a bunch of put contracts that were written. The July 1st 220 puts. There's a lot of activity here, banking on the downside. I went ahead and I'm going to join the fray. So I went ahead and I bought the August 19th 350 puts for $27.14. I'm losing money in it now. It's trading right now around 26 and change, so I'm down a little bit. But I'm anticipating that the semis are going to get hurt over the next couple of weeks, or at least have a pullback, so that way I can take some profits here. All right, here's Kraft Heinz. Now this, I really went against my inner gut here, so we'll see if this works out. But I mean, I'm taking a look at this. Had this big sell-off, tried to rebound, sold off again. Now it's kind of coming in weak today. I went long calls here. I don't know if that's going to be the smartest thing to do, but I'm going to show you what I saw this morning, which enticed me to do the trade. So this was interesting. So the options in Kraft Heinz rose more than 32 times the average. So someone here was buying a lot of calls. So calls reached 55,000 contracts. It's a lot. Very heavily weighted towards a 38, 38, 50, and 39. So I don't know, maybe some dumb money, maybe some smart money, they're moving in. I decided to follow. We'll see how this works out. I'm testing this theories, and we'll see how it turns out. But I went in. I went ahead and I bought the calls, $37.50 for July 15th expiration for $1.38. Trading at $1.49 now, so hey, I'm up like 8% in the trade. I'll take it, but let's see how this plays out. I'm looking at this unusual option activity, and I'm thinking that maybe there's something going on here that we don't know about. Here is Zillow Group, ZG. I went long calls here. I'm anticipating that this thing is gonna, so it made a higher low here, and it's kind of holding this 20-day, which is still trending down. It's below the 50-day, so I'm not going to say this is out of the woods yet, but I'm going to go against the grain here. This is a counter trend trade for me, and I'll show you what I saw this morning. So ZJ Zillow Group, the options volume rose 8 times the normal for that time of day this morning. And we're seeing a bunch of calls, so 1,400 contracts, 1,450 traded, which is, you know, pretty high. And I'm seeing that the 55 calls are pretty active. So, you know what? I'm going to give this a shot. Maybe there's something hidden in here. So I went ahead and I followed that unusual option activity. You can see here I bought the July 15th $40 strike price calls for $3.50. Trading at $3.35 right now, so I'm off a little bit in the trade. But so here's Big C. Big C, I traded it once before and I made a pretty good amount of money with it, and it was to the upside, believe it or not, even though it's in a downtrend. I believe I have to go back and check, but I think this was an upside trade. Maybe not. Maybe it was to the downside. I can't remember. But anyway, I'm seeing here that it made a higher low, and it's resting on its moving average. So I went long the calls here. I saw this Bloomberg release this morning. So the options in Big Commerce Holdings rose more than 10 times the norm. And you can see here it's concentrated in the calls, the 20 and the 25 calls. So pretty significant volume. So something may be going on. I went ahead and I'm going to jump on the bandwagon with the rest of these guys. So we went ahead and we bought the July 15th calls, $20 strike price for $1.80, trading at $1.50 right now. So I'm down, but let's give it some room, give it a chance to breathe. All right, so here's XM. Quantrix International? Quatrix International? I can't even say the name. Anyway, the ticker symbol's XM. Easy enough, right? I went long calls here. This thing is trading around $14. I'm anticipating maybe a little shoot higher. So the options in this contract, the options in this company rose more than 15 times the normal average. And you can see here that there was a bunch of contracts trading in the 15 and the 1750 calls. So there's a lot of folks anticipating something to drive this thing higher in the near term. So I don't know the company that well. I can't even pronounce the name of it. But that said, it seems like someone knows something here, and there's a lot of contracts going off. So I'm going to roll the dice and see what we can get. I went ahead and I bought the July 15th calls, $15 strike price for $1.05, and I'm kind of flat on the trade, but we'll see what happens. This is a long recording. All right, we'll get through it. I'm almost done. Here's Newell Brands. I'm anticipating that this thing is going to come down. It's been kind of flatlining for a while. It's hitting up against its 50-day. It did sell off this morning, but it's since come back. The whole market's come back. But let's see some downside here in Newell. Newell Rubbermaid, right? Newell Brands. I'm not alone in my thinking that this is going to come lower. If you take a look at this, the options, it's 11 times, option trading was 11 times higher than normal this morning. And it seems like it was concentrated in the very near term 21 puts. Huge volume for this name. And it seems like someone is taking a big chance that Newell's going to be dropping within the very near term. And we're going out, a couple weeks. So I followed suit. I didn't go so near term. I gave myself some room, but I went ahead and I bought puts. So the July 15th, $20 strike price for 75 cents. And we'll see where that takes us. Oh, looks like the market is selling off into the close. That figures. So we put on this bull call vertical at KMI, and I actually took off. I had an order in there to take off half. I didn't quite get half. I took off about a third. So we went ahead and we originally sold the July 15th calls, 21 strike price for 20 cents, and we went ahead and we bought the July 21st, July 15th calls. These are the $20 strike price for 51 cents, and I unwound about a third of the position today, and that's about a 45% return. I was hoping to get half off at around 50%, but I got what I got. So that's coming off. Here's eBay. I went long puts here. So eBay's been in a downtrend, kind of an ugly chart. The 20 is below the 50, still trailing down. You can see here it had a good couple of days, but it's off today. It's off 3.5% today. I went ahead and I bought puts on this, thinking that this is going to continue its downtrend. If you see this morning, the option volume was 4 times that of the average volume, and it was concentrated in the puts. The 47.50, the 50.45 puts, all heavily traded. So I agree with this synopsis. I think that eBay will come down. So I went ahead and I followed suit. So I went ahead and I bought the July 15th puts, $45 strike price for $1.52. We'll see how it turns out. I'm banking on this thing coming down. It increases my downside bias in the portfolio, which is really what I want to do. This is Bloom Energy. I put this on yesterday. It was late in the day after I recorded the video, but I'm going to catch up today. So I went ahead and I went long calls on this, not really working out too well, considering the stock is down 2.7%. But I'm anticipating that this company is going to bounce off of this 20-day moving average and head higher. It did hit some resistance here to fill the gap, so I'm not entirely sure if this is going to work out, but I did see this. Right, there was a lot of, so it was 5 times the daily volume of contracts that were trading yesterday, all kind of concentrated around these $18 calls. So 3,000 contracts traded, which is a lot for this company. So there's a lot of anticipation that this thing is going to start heading higher. So I went ahead and I'm following the trend, right? I'm following the consensus here in terms of the volume interest. So with BE, I went long calls. I bought the June 17th calls, $18 strike price for $1.10. Not surprisingly, we're off today considering where the stock is, but I have hopes that that my fellow traders who are buying these contracts know something, and we'll see this thing go higher. One more, and I'm done. This is a long one, but there was a lot of trades today. All right, here's Realty Income Corp. I went ahead, I put a bear put vertical on this. I'm thinking that this thing is going to hit the resistance right here around its moving averages and kind of come down and retest these lows here around 60, call it 63, 64-ish. So with the bear put vertical, I went ahead and I sold the July 15th puts, $65 strike price for 79 cents, and I went ahead and I bought the July 15th puts, 67.50 strike price for $1.65, and we'll see how that turns out. So a lot of action today, a lot of movement. I think May was good. I'm trying to set up some positions here for June. I'm trying to increase my downward exposure in the portfolio. So it's long enough already. So have a good shortened week of trade. See ya.